BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top traders. If you sign up with the link in the description, you get a free $100 when you deposit $100. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi. Hello everybody, welcome back to Wrecked City. Let's have a look at Wrecked City charts at the moment then. So Bitcoin lost its 26,600 to 700, we'll call it 650-ish area really. So it lost that area, which means that, and while being below this area, we should expect it to now be a rejection, like a resistance from that zone. Unfortunate, obviously, unfortunate. It's not just Bitcoin though that's done that. It's everything, and it's traditional markets, and it's Euro. It's all done it. So we've still got symmetry in markets, which means that Bitcoin on its own can be charted, but also looking at the domino, the classic domino effects, we'll look at those first then, shall we? So mostly, obviously, everyone will probably want to look at the Dixie, but for me, the Euro is the more significant because the Euro is the driver, as far as I'm concerned, of the Dixie. So I'll look at that. And so what we're seeing now is a pullback, which was likely to see some kind of reaction around 106.8. So your 200 exponential moving average, we had a decent response from it here. This is something that we had set up since the breakout. So we saw the golden cross. We were expecting a pullback into it. We got that, and then we got another move up. So that's what we'll be looking for at this point again. Now, another retest of the 200 exponential isn't particularly massively bullish, I have to say, but it does suggest to me that a bounce is most likely to happen from there. If that fails, then we got further to run, and the next bounce is going to be around here. But losing all this area, yeah, we can expect bounces from here, but it would be a fully fledged downtrend at that point, because at that point we would now have a lower low and we'd expect a lower high, especially as all the moving averages are pointing downwards. They're all going to be significant rejection areas on the way down. So yeah, we're looking for a bit of sign of life here, and yeah, I've heard people talk about it, and it would be to an extent kind of true. There is some form of cup in handle forming, which could be a bullish formation, but for me, I'm more inclined to go on the back of trend and momentum than I am looking at something like a formation. And at the moment, the trend and the momentum continues to remain down and should probably be expected to continue to go down anyway. So this could be a temporary peak on the Euro for the moment, but that doesn't mean that we're not going to see a bounce at some point, probably maybe even between today and tomorrow. So that is that, and obviously when you turn that over to the Dixie, we see basically an upside down euro-dollar chart, the inverse of that. And again, when we come in to look at this, we see nothing other than continued momentum. This is a daily, and you can see that we've already pierced the 200 exponential. So recognize the difference. We've not touched it here. We've already touched it here. So dollar strength across the board for all other currencies, but euro being the main driver, offering that opportunity for a bounce here. So that would be a rejection on the Dixie when we receive a bounce, if we receive a bounce, when we tag this area, 106.8. Bounce City FM. So there's nothing much more to say about that on the Dixie. However, you know, for people who are thinking about charting the Dixie, this last previous sort of high area between about 105.2, 105.7, that is on the Dixie's own merit, where I'd likely to see some kind of pullback rejection style. But to be fair, when you're just judging the chart based on momentum, which is what I'm doing, we're getting quite close to confirming what would be a pump signal on this Dixie. But you know, when in doubt, zoom out. I mean, we did a serious amount of trading when we said that the Dixie's going to break bullish. Back in 2021 into 2022, we predicted the bullish run. We also got the absolute top on the Dixie over here. We got absolute top. Within a 24-hour period, we got the top on the Dixie, and we saw the pullback. But now what we see is a definite bounce taking place around this area. And actually, it's quite bullish on the weekly too. So there's nothing really to be massively bearish on when we see this. But yeah, I would look for the 105.3 or so area for a rejection. But again, you know, based on its own chart, its own merit, its own trend, its own formations, it does look bullish. So we'll put a little trend line in there, and that might be it. Yeah, we might be looking for a pullback on there, and that's fine. Like, that is fine. I mean, what we see typically for the Dixie in this giant long-term channel that we've been in, a rising channel, which is often a bearish form. Well, I say often, most likely will end up in a breakdown at some point. Is that we run to the top, we wiggle around in the middle, and eventually find our way back down. But from the top to the bottom of the range has taken, on the last, let's just say the last time it actually happened, oh, best part of 3 years really. So we're looking like we're fulfilling a 3-year cycle for the Dixie, so for the dollar, which means that we're probably going to fanny around in the middle of the channel before we come back down to revisit the bottom, and the bottom of the channel is likely still going to be a higher low. So, you know, it's still in keeping with what you'd expect to see with a Bitcoin 4-year cycle. You know, it's not a problem. This is why I always say, you know, keep trying to keep your eye on the prize, you know, focus on 2025. If you're buying and holding and staking Bitcoin and or crypto in just general, like all of this area, all these downs, all these opportunities to incrementally pick up, whether you're dollar cost averaging with your paycheck or you're incrementally buying back after selling high, you know, all of these areas, the further we go down, are definitely decent long-term opportunities. Just think about it like that. I mean, if you're happy to do that, you will most likely get rewarded in the end. It very much for the dollar and Bitcoin and the whole of crypto looks basically just like it did before, and it's behaving just like it did before. So, and I know that people sometimes take offense to, oh, but just because it happened before doesn't mean it'll happen again. It doesn't. Of course it doesn't. But these are the models that we use, right? This is trading for you. Sometimes things change, but for the moment things don't look like they're changing. And if you think that inflation is going to be under control by 2024, like I do, then you would expect everything to be a-okay leading into 2025. So anyway, that's enough of that. Let's have a quick look at the S&P. Again, you know, down. So symmetry in markets. You've got the euro down. You've got the S&P down. Gold even is still fannying around below 2,000. So yeah, everything's coming down. That's fine. It's no big deal. The S&P on the daily here is still technically a bullish chart. We're looking for a pullback into just above that 4,038. That would be an opportunity for a long. You try that one just in case it bounced and went onto a new high. Other than that, yeah, looks like maybe it wants to pull back further. Again, I'm not sold on these charts. This market, all markets have been pretty lame for a little while now, and with that, sometimes you just have to sit back and go, well, okay, it's not a good trading environment. Maybe we shouldn't trade. You know, if there's no particular area or a really good setup or, you know, clean trend to want to take advantage of, just carry on with the rest of your day. There's really no need to try and overtrade a market which is proving to be relatively hard to trade. So let's move over to Bitcoin, since we recognize that the euro going down and the S&P going down and continuing with their momentum, we should expect probably the same to happen for Bitcoin. So if we're looking for Bitcoin here, we'll take ourselves first of all to the daily, and we can see that there's nothing below us until we receive this area here, which is around basically 25,000 flat, which is a 200 exponential. Previously, the 200 exponential had some relevance when we broke above it and came down to retest it here. So we might be seeing a reaction from it at 25,000. So that's obviously a fair old little drop from where we are right now, but that would probably, for me, be a decent area to try and buy back or just buy or take a position in. And if that fails, so be it. We do have further to go. Maybe not as deep as 22,600. Again, all of these areas for me are perfectly acceptable, since the bulk of my Bitcoin that I bought for the long haul was around 21,500. So that's all fine to me. Yeah, it's all fine. You know, like I say, eyes on the prize for the long haul. But from a trader's perspective, it does look like it wants to continue to go down. Generated a short signal yesterday now, so that was confirmed, and I think it's probably still playing out. And the only thing we can say in the bull's favor is that if for whatever reason, most likely going to be driven by other markets, if we see Bitcoin rise and reclaim its area that it lost yesterday, 26,600 or 650, then yeah, we might see this whole area get resolved to the upside. But for the moment, again, based on trend and momentum and all the signals and indicators that we use, yeah, you might see a little reaction around this zone, but we'd also expect to see a rejection around 26,650. Again, yeah, it's a matter of validation and invalidation points. You know, you can get bullish after a certain point, you can get bearish after a certain point. At the moment, we're technically in bear mode. Bull mode would begin once again around this 26,600. So lower than it was on the last invalidation point that we were looking for, which was obviously higher based on dailies and 4 hourlies. We were talking about it. We'd break bullish and we'd get bullish and everything would be bullish above roughly around 27,600. So again, it's $1,000 above the breakdown zone. Again, we never reclaimed that. We never got there. We had a move up into it, roughly, give or take, and we were rejected on that Bollinger Band Center on the daily. So again, just to recap where we were saying, look, we can't get bullish until we reclaim this area, and we didn't reclaim it. So invalidation of any kind of bullish bias going into bearish bias, especially now we're more bearish than before because we're below all the moving averages on the shorter term timeframes, with momentum not showing any kind of divergences whatsoever. So look, Bitcoin is only one part of the puzzle here. This is why I always start with Euro and S&P and gold sometimes. You know, they are the biggest part of the puzzle right now. We recognize that they all moved down, Bitcoin moved down, markets moved together. Yeah, it's no biggie, right? So at the moment, yeah, the bears are in control. Definitely, the bears are in control. The bulls will get in control above 26,650. Maybe not control, but the bulls will have a chance. But at the moment, they're going to struggle. And yeah, we could have a reaction like we're seeing at the moment on this Bollinger Band Center. It's neither here nor there for me, to be fair. The next area of significance would be that 200 exponential on the daily, which is around 25,000 flat. And we'll see what happens there. You know, if we're talking about trying to navigate and spot an absolute low on this pullback, on this downtrend, much of that is going to be determined by your traditional markets. But look, 25,000 on the daily is the 200 exponential. We've got the 20 and the 21 sitting around 25,400, 500, give or take. These are areas I would highlight as decent long-term buys. Honestly, between 25,000, 25,500 might not be the bottom, but it'll be a very decent, educated guess to where a decent position could be made in Bitcoin for the long haul. And look, I'm not here to tell you how much it's going to be when it's finished. I don't know. It depends how much money flows into it over the next few years. There's so many variables to trying to work out what the peak of the next bull run is going to be. If someone could do that, then you know it's probably just a fluke. You know, I just don't see how that sort of thing is actually possible. Because just don't know how much money is going to go into it over the next few years. It's virtually impossible to say that Bitcoin is going to be $250,000, $500,000. It's virtually impossible. You could work, you could make educated guesses, but that's basically what they are. But I know that that's the sort of thing that people like to hear, so they will click on those YouTube videos. But the reality is you know, people thought that it was going to hit 100, 250,000 on the last bull market, and it could have done, couldn't it? But look, the whole symmetry of the entire market's all more or less peaked at the same time, based around inflation data and Fed's, yeah, not just Fed, but all central banks and monetary policies shifting to kind of cope with that. So yeah, we ended up in a bear market for everything, not just Bitcoin, for everything. So we look at everything, you know, from a bird's eye view, and we recognize that everything is moving together, and so be it. If that's the case, the biggest, most liquid market, the one that has the trillions and trillions of dollars go through it on a daily basis of trading volume, is the Forex market. That's the most powerful. So that's the one that we should focus on the most, and that would be the euro. And the euro again is just about coming down into that area of support, and so with that we should expect something, and if we don't, then it gets worse, and then Bitcoin gets worse, and so that 25,000 area that we've been highlighting will probably get smashed through, and we could be looking at a $22,500 Bitcoin at some point down the line. But right now, yeah, the trend is likely, it does look like it's changing into a downtrend, but is it going to get nipped in the bud? Is the euro able to pop up from this area, or is it going to break down? If it breaks down, then yeah, we can write off for quite a little while, quite a few, maybe a few more months of downtrend. And if that's the case, fine, we dollar cost average. That is that. It is what it is. Right, thank you for watching. I hope you have a nice day. Take it easy.